Okay, and so that's why silver is more suppressed now. It's just that there's just huge derivatives. They blow up all the banks. I mean, I can see if silver goes to $20, all the banks blow up.
Ladies and gentlemen, welcome to this Silver Doctor special interview. Today we have a returning guest to the show, Harvey Organ from Harvey Organ's Daily Gold and Silver Report at harveyorganblog.com. Many people offer newsletters for sale, but Harvey offers his detailed, technical, crunching the numbers every single day, 5 days a week for absolutely free. So I encourage everybody to check out harveyorganblog.com to find out what's behind the numbers at the COMEX. How are you doing today, Harvey?
I'm doing just wonderful. How is that?
Doing wonderful, doing great. This is exciting times, now that we see gold breaking out to multi-year highs here. It's interesting, Harvey, because I can see, kind of an inside look at the driver's seat here at Silver Doctors. And one thing that I'm noticing is that last week, we didn't really have all the interest coming back, even though gold broke out, but just enough. Yesterday on Monday, we finally saw the interest coming back, and I'm starting to feel that investors are starting to, raise their eyebrows and notice what's going on in the metals. So I'm enjoying the breakout right now. I kind of wish silver wasn't lagging behind, but I'd like to get your thoughts on what you think, how you're thinking about gold and silver's performance here in the last week and a half.
The key figure in gold was 1350. That was the level of which they whacked 2 or 3 times, 4 times, and gold couldn't penetrate it. And the banks tried to hold that price, and they did for a while. But when I knew that we'd pierce that, there's so much derivatives out there. Once it's pierced, I knew the banks were starting to be in trouble, and sure enough, they were. Silver was 1506. The problem, of course, now is, and everyone's starting to complain to me, is why is silver so lower and not enjoying the rise as in gold? Okay, and the reason is you have to really pay attention to what J.P. Morgan's done. Now, J.P. Morgan has been acquiring a massive amount of silver, which I record every day. And at this side of the pond, it's about 280 million ounces that they have brought in the last year and a half, 2 years. And you can probably triple that over in London. So you're figuring that they have probably taken in pure silver. That's real silver. It's about 800 million ounces. The silver at this side of the pond is stored in a vault that's owned by China. And now the question is that silver belong to J.P. Morgan? And certainly I had my discussions with the CFTC and voiced my concern. And I basically said that J.P. Morgan's acquiring of silver when they're also the world's largest short was illegal. And, of course, the CFTC said it's perfectly legal. I screamed out loud and said it isn't. Of course, the lawyers started getting involved. And then the CFTC said to me something. He says, how do you know that the silver that's in the house of J.P. Morgan doesn't belong to J.P. Morgan, belongs to a sovereign? And then, of course, I kind of suggested, well, you're talking in my language. I've always said that China basically loaned silver to the West in 2002. And they were very happy to do so because they were able to acquire tremendous amounts of gold. They've been accumulating it since probably 1984. Started right after when Deng Xiaoping, decided it's far better to fight the United States with kindness and let trade come in, and China just continued to buy whatever their yuan with gold, and they got gold and they started accumulating it and they held it in the banks. Not silver. Silver was always stored there. They didn't know what to do with it. It was a Western phenomena until 2002, when the United States ran out on the Manhattan Project. And when they ran out, there's no question that they knocked on the door. The United States knocked on the door and said, "Look, China, we need your silver." Now remember that China has been a silver nation for 400 years. I mean, since the 1600s. I mean, they've acquired a lot of silver, and it's I'm sure it's over 1 billion ounces they had in 1949, and they just locked up, didn't know what to do with it. And then all of a sudden, hey, wait a minute, this is a good deal. So China gets favored nation treatment. They're happy. They knew that the game is to whack gold, and they're happy. So they're getting gold cheaply, and gold keeps flying over to Eastern nations, including China and Russia and everything. And that's probably why. And I'm not the only one. Alistair McLeod also believes that they got probably between 20 and 25,000 tons.
Yeah, wow.
Okay, which is huge. Now, now remember in 1990, the United States had about 2 billion ounces of above ground silver, and then in 2002 there were zero. So they utilized in the 12 years close to 2 billion ounces, and now they're down to zero. So obviously they certainly had to get it from somewhere to continue. I don't think that one of the reports shows that it was the sales that that this is what's causing the market, the massive sale of silver, and that's not true. The correct answer is the leasing of silver into the market by the West constantly, and the derivatives. So the derivatives, so you can imagine, like we're pretty sure that we're dealing with between 500 and 750 obligations per 1 ounce.
Wow. Yeah.
Okay. So you can imagine the banks will fry the moment you if you get above a level, they implode. This is why Deutsche Bank is in a major mess, and they're trying to do their bad bank. They're trying to do so. They'll try to load all their stuff, and it's supposedly 60 billion euros, but their derivative loss of Deutsche Bank is probably 10 times that. With all this, and they are massively short in the silver metal, which is why it was part of the lawsuit. There's many lawsuits, and there's actually criminal cases going on too. And Deutsche Bank is the primary guy that supplied the chat room discussions and everything of how the fraud was committed.
Yeah.
Of course,
yeah.
And that's known. That information is now out. Well, it's in the courts now. We certainly got some of it, and right now it becomes a criminal matter because of the J.P. Morgan situation, and I think it's getting serious because whereas in the first case with the CFTC, it's civil. It's not really criminal, but J.P. Morgan is criminal, and and that's the Department of Justice. So that's getting pretty deep, and it stopped the civil matter. So the civil matter has now stopped. We're waiting. These guys are still hacking away at any time, so they think they can get away with it. But
do you think the DOJ is dragging their feet on this, Harvey?
Is the Department of Justice has got a problem because we have told them many times what was going on. Remember, I've written letters to the Department of Justice. I've written to the OCC, and here is the crux of the matter. There is no silver or gold at the COMEX. That gold and silver has gone. And you're going to ask, well, they're showing it. Yeah, the answer is it's a piece of paper. It's a sticky, and it's this guy owing this guy. A owing B, B is owing C. They all there's nothing there. And what did they do? They hypothecated it and they leased it out. Both. So hypothecate means they took the barcode numbers, and then just sold it and gave a sticky note that they owe this guy. So the poor guys who have supposedly their gold or silver stored at the COMEX have got nothing but a piece of paper. And the reason is every single ounce of gold at the COMEX is unallocated. There's no such thing as allocated over there. So it's zero. And that's why if you take my figures that I give every day showing nothing is coming in, there hasn't been very, very tiny amounts of gold coming in a year and a half. Whatever's coming in silver, of course, is aposticated out again. Okay, and because there's far more uses in the world of silver than there is of gold. Okay, because gold, the usage of gold, the uses of silver, the demand is over 1 million. I think it's about 1,080,000 ounces demand, and they only supply 700 million. So I mean, the demand over supply is quite high at 380 million ounces, which is huge, and that's because of the pharmaceutical use, the photovoltaic use, and of course the many uses for electricity. Okay, we were using for the solar cells. That use in photography is down, but the photo is for these solar cells are huge. And one of the key suppliers, of course, is China. China is making a lot of these photo cells, and the demand is coming in very, very high. So we now have a mess on our hands, as we got, of course, the demand is high, and the silver supplies are going towards China too. Even though China produces about 117 million ounces a year, they're importing silver. And the other one, which is dramatic, is India. India is massively bringing in silver. Before it didn't. They kind of like gold. The Indians have been the gold lovers for years. But I guess they're having trouble getting gold. So what do? The brides have decided, hey, silver's not bad. So they brought in a huge amount. I think it's about 400 million ounces of silver came in this year in India, which is just phenomenal. Okay. And China's bringing in, not only do they produce it, but they also bring it in too, because it's not enough what they need, so they're bringing in silver. So the demand is very high. So what you're now seeing is a problem where we now have entities realizing what's going on are now going to attack the COMEX. You'll see this going on because they realize, and you're getting a good look by if you see Bitcoin. When you start seeing Bitcoin at $11,000, you generally know what's going to happen with gold, because Bitcoin is not suppressed, but gold and silver are. You're seeing Hong Kong citizens realizing the trouble what they're in is now whatever they can is converting and to try to get. So they're trying with Bitcoin, but also the Chinese are very well versed in gold and silver. And they're doing as well, because as far as I'm concerned, is they kind of like what you can touch and feel and hold in your hands. They kind of not too crazy about the Bitcoin situation. So that's in a nutshell what is the background now. And you'll probably see sovereigns attack for gold, because they're going to realize we're now coming into an era where the countries are going to need it. Before, they were selling it, like Canada and Australia, although we have it in our ground. We sold every above-ground gold, but now central banks are going to need it. So you're seeing central banks starting to go in, and you'll probably see them attack the exchange for physical. And instead of being a paper obligation, it will become, they'll desperately try to turn it into real. So you're going to start seeing banks scurrying around the planet trying to find metal. So I'm just giving you a background. If you want to ask a question, I can try to do the best I can. But in a nutshell, that's what's happening right now in the metals. China is really China kind of it wants its gold first. That's the metal that it needs to as hard currency. And so will make eventual hard demands on the United States that it wants its silver back. It's certainly doing it on the rare earth, which is another little part that's utilized in all these if for industry in the U.S. They desperately between 70 and 75% of rare earths come from China, and this is going to hurt terribly if the United States cannot get its rare earths. The cost is too high. As you see, the rare earths it's in oxides. They're in oxides and chlorides or whatever it is, and it's hard to extract. It's hard to get the pure metal. It's very high cost, where China is very low cost producer, and they were able to sell these rare earths at a very low price. So they dominated the industry for the last 10 years. And the other guys, the Western, although there are some rare earths, but they just couldn't produce it what China could. So that's going to be a real war between China. China is certainly going to say they'll stop their rare earths, and they're probably behind the scenes said, I want my silver back. Okay, and so that's why silver's more suppressed now. It's just that there's just huge derivatives. They blow up all the banks. I mean, I can see if silver goes to $20, all the banks blow up. All the 6 major derivative banks just blow up. Deutsche Bank, Bank of America, they all blow up. You're dealing with probably 4 or 5 billion ounces of shorts on this stuff that they just don't.
And
now, even though J.P. Morgan has silver, they have. I don't think they have as much silver to cover the derivative short.
That's what I was going to say. Well, in addition, because if they're holding it for China, then is it also possible that all that they claim to have is not all there, as in China might get stiffed on some of that silver if they ever do request delivery of, a significant portion or even all of it?
I can tell you what's over on this side of the pond, okay, and that's been verified by the CFTC. I'm just telling you, the silver that's in the vault of J.P. Morgan are real. Okay. The question is, he told me, like a CFTC. I mean, that was quite a comment, coming from them. Remember, I have a lot of discussions with them. They fear that what we know, and they certainly don't want, they don't want them that they kind of precipitated a fraud. Although we know it's a fraud, it's a massive fraud. And J.P. Morgan's the center. Remember, J.P. Morgan. In 2000 and when was the bear? 2008, right? J.P. Morgan wasn't involved in the silver market at all, and then they came in. Bart Tilton, and I've had discussion with Bart before he passed away. It was amazing how J.P. Morgan was able to take possession of all the short position of Bear Stearns, and then they gave them 6 months, and J.P. Morgan just said, screw you guys. I'm going to do what they want. And for years, 11 years now, J.P. Morgan has been on their own. So this tells you how much power, the powerhouse of J.P. Morgan. They're totally, going against the CFTC. And they're short. And I guess the CFTC don't know how to handle this.
And then the other thing is, once the derivatives go, who's going to be the next J.P. Morgan, right? Because if J.P. Morgan came in and stepped up to Bear Stearns, well, who's going to come in and step up to J.P. Morgan, assuming that derivatives market blows?
If J.P. Morgan goes, the game's over. Okay, J.P. Morgan. That's the end.
And
that's why they're very. Yeah. By the way, Deutsche Bank has more derivatives than J.P. Morgan. Okay, so you can imagine the mess that Deutsche Bank is in, and they knew they're in trouble. They just don't know how to get out of it. They made a massive bet on fixed income, and they just totally screwed it. And that's why they went unilaterally to the judge and said, "Look, we're in a mess here. Just get me out of here. I'll pay a fine. Just get me out of here." Okay, and that's why they paid $33 million on each silver and gold to kind of, and they provided wonderful stuff. The trouble was the Department of Justice came in and said this is now a criminal matter, and we've been on hold for 18 months. That's the problem that's in. But it's certainly going to they're going to get hit pretty hard. The banks, the 6 or 7 derivative banks. That's it.
And if it's not the price of silver increasing that can blow up the derivatives market, it could also be if Deutsche Bank goes under, that could also blow up the physical silver market because
for sure. For sure. Yeah, you don't need J.P. Morgan, Deutsche Bank, or Scotia. Scotia Bank's got another mess on their hands too. Scotia Bank did everything to sell Makata. They would sell Makata for $1. Nobody wants it. Why? Because they got a massive derivative losses.
Yeah. Deutsche Bank was on the verge of breaking $10 back in 2016, and it seems like someone came in and stepped up. But it seems like they're not stepping up this time. Now it's trading at 6 and something. So
anything below 6, you give them they're toast. They're toast. Just how far? Look at Bear Stearns was what $60, and then in 2 weeks it went down to zero. Same thing. Yeah.
And you know what I hear you saying, Harvey, what it's sounding like to me is that, you know, we hear about, you know, we know that it's the physical market that's going to blow up the derivatives, but it almost sounds like what you're saying is that it's silver that they're worried about. Silver is the one that's going to blow it up. It's the gold market, yeah, right, but silver, that's the one that has the potential to blow up the whole system.
That's what I'm telling you.
That's the Achilles heel there. That's what I'm
understanding. That's exactly what I'm telling you. And then when everybody tells me about silver, I get it all the time. They say, Harvey, you knew that gold was going to rise, and I told them on the silver, I said, have patience, because I do know that what's going on in Europe. I know they're backward by 12 cents, which tells you that there's no supply over in Europe, and certain people are going to take the COMEX on. They are, and they are. Okay, and when they do that, what they do is it's easy. You attack on the exchange for physicals, and all of a sudden, these banks don't know how to handle this, because I don't know if you know how much these how much are circulate. It's been, I'll tell you exactly, 8,000, 7,000. In gold, it's about 21,000 tons of gold has been these exchanged for physicals in the last 3 years, total of 3 years. Okay, in the United States, that's equal to the entire world's supply or more. Okay, silver has been, I don't know, I record how it's huge. It's about 4 times what the world produces each year. Okay, so I mean it's extremely high. So all of a sudden, these paper obligations, that's an easy way just for the banks. They, you know, the guys who really want silver, okay, they go in and buy. You can buy these exchange for physicals. You buy them, and they turn around and say, okay, now I'm standing for delivery. Oh boy, we don't have it. Well, I want it. Okay, that's the fight that's on there now, and that's why it's backward. So I don't know if you know that in London in gold, in fact in silver too, they have what is called these serial forwards. And they're done at 13 days. Okay, so in other words, every 13 days it renews itself. Okay, every 13 days. Now, why 13 days? Why not 14? Why not 21? The reason is that 13 days the OCC is not involved. And the reason is they figured that 13 days, who's going to bother? It's going to settle and everything else. But no. So you have these massive amounts of serial forwards trading 13 days. So all of a sudden, if we now explain this to these authorities, hey, wait a minute, you've been overlooking. So I wrote a letter to the OCC saying, look, I just want to know, I'm telling you this is going on. It's clear as day that it's happening. I just want to know, is there's a risk to the banks? Are you aware of it? And what happens? The CFTC and the OCC refuse to answer me. Then Mooney, he's not an MP, he's a congressman for West Virginia, writes a letter to the CFTC and the OCC demanding an answer, and again, no answer. So the refusal to answer speaks volumes as what's going on. They realize the mess they're in, and it'll bring down the banks, okay? And especially when one realizes, well, wait a minute, they're not answering me, we'll take possession. And I can look what they're doing to China. Look what these guys are going to say, I'm taking delivery. They got lots of U.S. dollars. They're going to say, I'll take possession of silver and I'll take possession of your gold at the COMEX, and that'll end it. The banks, the derivatives will blow up, and that'll do it.
Back in I think it was early 2018 when we had the VIX explosion and the volatility index. My point is, a couple of those ETFs literally shut down because they blew up. Do you foresee a time when the GLD and the SLV could literally blow up and end up shutting down?
Okay, I'm probably going to shock you in this. Okay, I don't think there's very little ounces of gold at the GLD, and there's very little silver.
Okay.
I've been saying this from day one. And how I know is that you cannot lease gold or silver at the SLV. It's illegal. Okay? That's one thing in their indenture. They say you cannot lease. But it doesn't say they can swap. And that's how they've been doing it. They've been swapping dollars for gold or silver. So you see whatever whenever they needed the physical silver, they would go and swap with dollars. So all these SLV and the GLD is nothing but a piece of paper. They don't have anything. And that's why I noticed that they were continuing. You know, I've been saying it since 2006 that there were frauds. I was probably the only one at the beginning, and then of course I was joined by a lot of others. They realize that it's a fraud. So the answer to your question is there's nothing there, and they go belly up. There's nothing there. Piece of paper. So when you see them add gold, okay, it's not adding real gold. They add paper gold. They think they can do it, so they'll buy up an obligation that someone has to deliver gold to it, okay, but not real. There's no real gold, and this is what's going on in all these markets. They're paper flying around, but it's the real physical they don't have. So in answer to your question, GLD and SLV are total frauds, and they are going to go down.
Because I think one of the, I don't remember if it was the largest one-day inflow supposedly ever
36,
for the GLD last week.
No, okay. It's actually no. It was Thursday. It was 2 days ago. 36 tons. They don't have an ounce. They're going to bring in 36 tons. Oh, give me a break. They don't have it. They can't. I know for a fact there's nothing in London. They can't get that gold. They're desperate to get gold over there, and there's certainly no silver, and there's nothing over at the GLD and SLV.
Harvey, what happens to the price when these markets blow up? Is it just going to reset higher? Is it just going to keep moving day by day? Or is it just going to, essentially a bank holiday for the COMEX? Or how do you see that playing out?
Wonderful question. Okay. First of all, when you raise the price of gold, that becomes a liquidity. What is the crisis we're now in? We have no liquidity. People have lost. So you need to raise the price of gold in order to provide more lubrication for world trade. So, and certainly China wants that. China is probably asking the West. We want, as part of a trade deal, if there is one, which I doubt there's going to be one, but we want the price of gold. And they probably want 10,000 to start. Okay, and then figure 10 to 1 for silver. Okay, and then silver becomes the currency that low lights like us, me, and you are use for trading. But the upper echelon guys, the bank use gold, and countries will trade in gold and stuff like that. But I think that's where it's heading. China certainly wants an elevation in the price of gold, and they will. It's interesting. I was speaking with Reg Howe, and he thinks that it's quite possible that China may have to sell some of the gold back to U.S. and when this is all over, and to start again. So each of the countries have some of the gold, so they all will start to trade. But we'll see. But it's not good if one country has all the gold and nobody else has anything. It defeats its purpose. So you certainly need gold produced. And Canada, instead of selling its gold, which it has on the ground. So Canada produces about 150 tons a year, will no longer sell it into the market, and they will bring their gold, and of course it'll become central bank gold. And that's what all the countries that don't have, if they have oil, of course that will be turned, and that's why the good Shanghai exchange, the gold exchange, so they will then turn gold that way. And countries will need to bring in their gold. But so if you're asking me what I think the level would be to try to lubricate the world, I'd say they'll probably raise the price now to 2,000, and then overnight they'll raise it to 10,000. So you'll see it rising to 2, and then all of a sudden you'll see a bank holiday, and then they'll say we're now revaluing gold at 10,000. Start handing it in. I think that's where we're heading, and it's this year. I think we're going this year. I think it's in a mess. The whole financial system is in a mess. I think it can't go on.
And this is a good segue into some closing thoughts, Harvey, because I'd just like to, get what you've been thinking about over the past few days, because, one of the things that's come to my mind is that, gold's breaking out here, and I'm thinking, well, this is it. This is the start of the move we've been waiting for. We're at 6-year highs. But silver is just being sat on. So, what I've been thinking about over the last few days is that it seems like they're just really trying to sit on silver just so people will remain skeptical enough to say, no, it's not happening just yet. It's not going to break out. Almost as like a morale crushing move against silver to get people to think that it's a fake out with the breakout in gold. So that's kind of what's been on my mind in the past few days. What's been on your mind the past few days, Harvey?
Well, certainly I looked at that and I saw right away that silver was lacking. Okay, and I kind of thought that if anything, silver would be going through the moon because of the massive short position, because of all the derivative losses of the banks, the major 6 or 7 banks. You're right. I think you got a certainly valid point why you think silver is suppressed. I think the Chinese situation is certainly there. Once you realize that China certainly has that right for that silver, and of course the United States doesn't want to give it yet. There's certainly arguments that the United States are telling China, you've been stealing our technology and you've been hurting us. So Trump is certainly right. Trump is basically saying we've been watching the Gulf, or the Straits of Hormuz constantly over years, and China's been taking oil, and we've been protecting those laneways from Iran, and of course the United States hasn't been paid for it at all, and it certainly wants to be. It should be. But you're now seeing for the first time, the United States has had enough. It's getting being poked all the time, and we'll see how the relationship between China and the U.S. evolves in the next few days. I doubt if there's going to be a trade deal. If there is no trade deal, of course the market's going to falter terribly, and probably China will certainly make its demands known. They may, and you know what China may do? China may say, "I've got enough. I'm just going to say I've got 20,000 tons of gold, and that's the end." And once they do, you've got your 10, your at least $2,000 to $3,000 level of gold trading plus your 10 to 1 of silver. I think that's what's going to happen if China's had enough, and they're going to say they're going to go on their own and let the United States suffer. That's in my mind. Okay, I've always, certain areas I'm versed, and I carry on discussions with a lot of guys, and we all, we're looking at this. But the most important thing is have patience. It's just the market's a fraud. The market, every asset's higher in price, and gold and silver is suppressed, and yet the real money is silver and gold.
Yeah,
it's amazing.
Yeah.
That's the real metal. That's and it will always be. Okay, it's just that we've had this experiment since 1971, and that experiment's now coming to an end. And,
yes, it is coming.
Yeah, it's coming to an end. So let's see what we do. I tell everyone to have patience. As long as you have it in your hand, you're in good shape. Don't have a piece of paper saying you have a right for it. You get physical silver in your hand. That's the ultimate thing, and then let this play out. So that's my thoughts.
And I do thank you a lot for your patience and working with me to get this phone call going. Maybe in the future we would just do the phone call or something like that.
Yeah, it's okay. That's it. The most important thing is I wanted to get out because I'm pretty sure that's what's going on. I've been involved with a lot of the guys, and we're pretty clear that that's what's happening.
Yeah, and I mean, it is getting exciting. And, and it's like I said, I didn't see the traffic pick up until just yesterday, right? So all last week when gold broke out is when, we still didn't have any interest in it, right? It's almost like people didn't even want to believe it. But now
you don't know what's going on in London. You don't know what's going on in London. I do. See? See, what's important to understand is COMEX is not a physical market. It's nothing but a paper market. London is a physical market. You know what? I'm going to change that. Half physical, half paper. Okay? They try to be. China, Shanghai, is 100% pure metal. That's why when they do these exchange for physicals, they don't say, let's go to Shanghai. because God, it'll be over in 30 seconds. You see? So they give these, so that it makes it believe that there's metal, and you have these massive amounts circulating around. The game ends when a sovereign realizes what's going on, and these things trade. They say, you know what? I'm going to take possession of these exchange for physicals, and I'm going to turn them into real metal. I've got a position. Let's go to London. Okay, over here. And that's when it's in a crisis. By the way, do you know why gold and silver always fall at 12 o'clock? Between 12 and 1:30 every time.
Right.
Why?
Well, Europe's closing down at that time.
Yes. So, right. And what happens at 12 o'clock?
That is 12 when the LBMA shuts down.
Yeah.
On a daily basis.
Yeah, 12 o'clock. It can shut down at 10:30 if there's no metal. Actually, it was 11 o'clock today because there's no metal there. So they said, okay, we're closed. That's the end. And once they realize that, they go on whack. You see, China is long-term thinking. China will think a year ahead. Americans, 20 minutes. Like they're shorting today because they're not. We'll worry about it tomorrow. But right now they got to cover. Right? That's the risk. The risk is if they start like gold was now what 623. What's gold now? Because they knocked it down. Oh, okay, so it's 24. Oh, look at this. Okay, the gold is 1424.70, and they knocked it all the way down to 1411 at 1:30. If you look at the time, it was exactly 12 o'clock. Yeah. So what they did in an hour and a half, they were not worried because nobody could turn around and take that piece of paper and get physical. But in London, they do it all the time. So all of a sudden, they're messed. So they won't do it when it's London time. The fear is they have nothing there. You see? And that's the crisis. So that's what's happened here. Okay? Actually, silver's doing not bad. Silver's holding itself.
Yeah, I think gold almost got to 1450 almost in the overnight hours, if I remember correctly.
1551.
I didn't know they just knocked it all the way down to 1411.
Oh yeah, 14. It was 14. No, 1527 on silver. Silver held 1411 on gold. I saw it. So normally I would write to the CFTC and give them my opinion. Scream at them, but I decided it's not worth it anymore. I mean, they know that we know, and the most important thing, the message I can possibly give you guys is that, look, to have the physical in your hand is far better than dealing with this paper. And don't get excited. I get very upset when guys get excited. Why is silver down and why is gold, I said, have patience. I told people it was going to happen. I gave people advance warning because I know for a fact there are guys going and attacking the COMEX.
Yeah.
Wealthy families.
And some days on your report, I see you'll put out expect gold to be hit through options expiration this week.
All the time. All the time. Happens all the time.
Yeah.
But it's going to be less and less this year. I'm waiting this month. See, we're in options expiry week now. Okay, so I expect it to be hit a bit. But you notice they tried, and it's gold is resilient, so it's holding itself. They can't hit. They can't hit in the physical time zones. They only can hit in the paper zones, and that's not good for them. They need to supply, and by the way, in order to whack, they're going to need physical metal. You can't do it just with paper. You got to have something. So you got to go to the BIS and say, look, I need some tons of gold. Okay, but the trouble is the BIS told them we don't have any more. They've lost liquidity. I don't know if you knew that, but their swap positions have gone dramatically down. And why? Because they don't have any physical. They need it. So the bank guys, when they're doing a raid, have a high risk because they got to come up with supplies, physical supplies, and they just don't. They just can't.
And now they have another problem on their hand because they've got to deal with, investor psychology switching from sell the rip to buy the dip, right?
Correct.
So, that's before anytime gold pops up 1350, we're talking about, well, you better sell it now because it's never going to break this line.
Yes.
You've got the sovereign stepping up, and then you've got the psychology just of the individual investor switching to bull market mode. Of course, we've known it's been in a bull market all this time, but now your mainstream investor is starting to understand that as well, Harvey.
Correct. That's deadly to them. It's when the little guys start going into silver and gold and taking possession, and not worry about the market.
Mm-hmm.
You know what I mean? They say, thank you very much and appreciate. Thank you very much. And I'll take my gold and silver. Thank you very much. When they do that, it's over. It's over.
Mm-hmm.
You have millions of these people. Like right now, you got all the Chinese. Can you imagine, and Hong Kong's a very, very wealthy city. And all of a sudden, you got all these millions of people sitting there and saying, my wealth, how am I going to store my wealth? So some of them are going to go to Bitcoin, but then they're going to look, they're going to crack this computer system. I want my real metal. So they're turning around and they're going and demanding gold and silver, which is what China itself wanted. China has been telling its citizens to buy gold for a long time, and now they're listening. They're listening. So you'll see it. Just sit back and watch and not be concerned. I know Kranzler wrote today and says he's expecting another raid. I'm going to be different from him. I don't think they can because they don't have any physical metal. You need to have some physical in order to continue.
Yeah.
They just don't have it. They don't have the stuff. So enjoy this thing while it lasts. It's going to continue. We're just at the beginning phase. We're at basically, we're at the beginning of the clock. We got another, 12 hours to go before this whole system, and it's going to be fast though. They're going to blow up. I expect Deutsche Bank. I expect Scotia to blow up. I expect J.P. Morgan will be the last one. And there is, because the others are not protected. See, J.P. Morgan has some protection, and of course the Fed will do everything to protect it. But the other banks, Bank of America, Citibank, they'll all blow up.
Yeah.
That's what to watch for.